Roger, let's come back to you for a question from Avery, who asks, my wife and I have about 50% of our portfolio invested in stocks. I think the stock market's in an AI bubble right now, and it's going to crash soon. I know you can't time the market, but I'm still trying to convince my wife we should reduce our exposure. Curious what your thoughts are for retirees who may not have 10 years to wait for the market to recover after a major crash. Really good question, especially because they identify and they know that upslope after you have a big crash like that. But he says, don't think I got 10 years to do it.
First, I don't think it takes 10 years to recover. The data would tell us that's not the case. The data would tell us that the average bear market recovery is a little over 300 days, the longest being 956 days. That's about 3 years.
Okay.
That's the first thing.
Okay.
People have been predicting a stock market crash like this for the last 8 years. Nobody knows what's going to happen. The challenge is you're trying to time the market. That rarely works. Statistically, your chance of timing the market is 0.0 with 213 zeros before the next number. So
whatever that number is.
So getting in and out isn't what's going to make you successful. We look at like Dalbar Research. They research what average investors do versus just the S&P 500. They underperform by 50%. It's because they make changes like this. I understand you're concerned. What I would suggest you do is, one, sit down and segment your money by responsibilities, which is what we do with the bucket strategy. Okay. 1 to 3 years of cash that you need for spending. Then income money, and then growth money, which is 6+ years.
The 1 to 3 years of the cash is stuff that you want to make sure you have, that it's non-volatile, that's something it's cash, literally. It's cash or cash equivalent.
Cash equivalents, for sure.
Yeah, that's not in the market or anything like that.
The whole reason we do it, average bear market recovery. So market goes down 20%, average time to get back, a year. That's 1 year. 3 years covers great financial crisis. Okay. I think the other thing to ask is, you said you don't know if you have 10 years to recover. Well, do you need all of your money in the next 10 years? Because if you don't, then your time horizon is not 10 years. Like, are you 60? Are you 70? Do you have beneficiaries? Do you have kids? I have a great story about this guy I go to hunting camp with. We were talking about an individual stock and some fundamentals. He goes, yeah, it's kind of overpriced. This is like 2 years ago. The stock is up substantially since then. He goes, I don't think that I have that. But that's outside my time horizon because I'm 58. Like, I don't have that amount of time. I go, what are you talking about? Because he has amount of money he'll never spend. This is going to his kids. Right. I go, your kid's 28. Yeah. He's got a 50-year time horizon. And he never thought about it that way. He looked at me, he's like, I never thought about it that way. It's not really for my benefit. It's for his benefit. Yeah. Because people just look at their money and all of their money is just a big pile. When you start to break it down, you can give it responsibility. So you can look and say, hey, do I need 50% of my money in the next 6 to 7 years? And if not, then you should be okay with this. That's step one. Step two, you could, if you have a big exposure to technology or AI, which I'm kind of assuming they do if they're asking this question, you could be in the stock market in different asset classes and lower your exposure to AI. Right. You don't have to get out of the stock market. You could go to a different part of the stock market or a different asset class and have less AI exposure. How we determine what people should be doing, figure out what your risk capacity is. How much risk do you have to take? Yeah. Do a financial plan. If you need to have 50% in the stock market based upon your goals, your priorities, and what you want to do in life, then you need to have 50% and hire an advisor to help allocate and work around situations like that. But just getting out of the stock market rarely works.
Yeah. And Jonas, I know that you're a big fan of haystacks, but one of the difficulties is that you can find out that you can be invested in multiple different kind of funds. You need to know what's underneath the hood of those funds because you have may be invested in the same sort of thing. So he may have 4 or 5 different things, and they all have significant AI investments underneath the hood.
Absolutely. I mean, you need to determine what your risk is. We call it our cholesterol check, our blood pressure check. We have a third-party rating system that looks at, you remember the old Consumer Reports magazines, Doug, where before you bought a
refrigerator.
Yeah, refrigerator. You looked at that. Well, we have that. We have a third-party company called Morningstar that analyzes all the funds, and people can determine what their risk is. And I think that Avery really needs to do this, but also she needs to do exactly what Roger did and have a deer stand financial plan. Ultimately, somebody to talk to
Deer stand
about what
plan.
her financial goals are at the end of the day. I mean, Roger did a financial plan in a deer stand. She just needs somebody to talk to her about her goals. And you know what? If she is nervous about the stock market, a very good financial advisory firm will take that into consideration. Right. And then you could always start peeling back and being less conservative or being more conservative at this point, maybe lock in some profits. Ultimately, it's her financial plan. If she's concerned about the stock market right now, she's not the only one. I get calls like this about 10 to 20 times a week.
I want to make a comment. You made a good point. If you do a financial plan and Avery could be 100% cash and still accomplish everything she wants, that's permission to become more conservative. It's not always, you have to be more aggressive. Avery might be in a situation to become way more conservative. You just don't know until you run the plan. Yeah. And just doing things because you think something is going to happen, it typically is not going to work. I'll never forget, heading into 2024, I had an individual come into my office in January, and he's like, hey, I know the market's going to crash. The exact words, and his wife was with him. Yeah. And we both kind of looked. I said, well, how do you know? And he listed like 5 things. I said, but how do you know the market's going to crash? Well, I just know. Well, what did 2024 do? 20+%. Boom. What we did is we found some products that had some protection for them to get them through. Really, they were really happy they did it because his exact words, well, we buy now, we'll sell now, we'll buy in lower. I go, you don't know what's going down. So you don't know what's going to happen. Figure out your risk capacity. That's really the ticket to freedom in retirement.
Premier Investments and Wealth Management, I mean, they'll sit down with you and you have these conversations. It's phenomenal to be able to do that and have somebody that you can sit face-to-face with. You can do it in person. You could do it over the internet and Teams, Zoom, whatever you do. But if you want to get a head start on that right now, go to premieriwm.com, download the Investor's Guide to Market Volatility. If it's something you're concerned about, you need to review where you are and figure out just exactly where you want to go. Start out by downloading the Investor's Guide to Market Volatility and then make your appointment at Premier Investments and Wealth Management website, premieriwm.com, or by calling 800-383-6590. That's 800-383-6590. Premier Investments and Wealth Management, named to Forbes 2025 Best in State Wealth Management Team.
Securities and advisory services offered through LPL Financial, a registered investment advisor, member FINRA SIPC. The opinions voiced in this show are for general information purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments may be appropriate for you, consult with your attorney, accountant, and financial or tax advisor prior to investing. Premier Investments in Wealth Management and LPL Financial do not provide specific individualized tax or legal advice. We suggest that you discuss your specific situation with a qualified tax or legal advisor. Rebalancing a portfolio may cause investors to incur tax liabilities and or transaction costs, and does not assure a profit or protect against loss. Economic forecasts set forth may not develop as predicted, and there can be no guarantee that strategies promoted will be successful. All performance referenced is historical and is not a guarantee of future results. All indices are unmanaged and cannot be invested into directly. There is no assurance that the techniques and strategies discussed are suitable for all investors or will yield positive outcomes. The purchase of certain securities may be required to affect some of the strategies. Investing involves risks, including possible loss of principal. There is no guarantee that a diversified portfolio will enhance overall returns or outperform a non-diversified portfolio. Diversification does not protect against market risk. Prior to investing in a 529 plan, investors should consider whether the investor's or designated beneficiary's home state offers any state tax or other state benefits such as financial aid, scholarship funds, and protection from creditors that are only available for investments in such state's qualified tuition program. Withdrawals used for qualified expenses are federally tax-free. Tax treatment at the state level may vary. Please consult with your tax advisor before investing. Forbes' Best in State Wealth Management Teams ranking was developed by Shook Research and is based on in-person, virtual, and telephone due diligence meetings and a ranking algorithm that includes a measure of each team's best practices, client retention, industry experience, review of compliance records, firm nominations, and quantitative criteria, including assets under management and revenue generated for their firm. Investment performance is not a criterion because client objectives and risk tolerances vary, and advisors rarely have audited performance reports. Shook's research and rankings provide opinions intended to help investors choose the right financial advisor and team, and are not indicative of future performance or representative of any one client's experience. Past performance is not an indication of future results. Neither Forbes nor Shook Research receive compensation in exchange for placement on the ranking. For more information, please see www.shookresearch.com. Shook is a registered trademark of Shook Research, LLC.